In this presentation, we're going to record sales receipts with the help and the use of bank feeds. In other words, we're going to see the deposits come through with the bank feeds, and we're going to think about how we can enter the sales receipts into the system. We're also going to use a clearing account to help us to group those sales, put them in the system as a deposit, and then match them up with the sales receipts we will see with the bank feeds. Here we go with a good remedy for our accounting needs, Sage Business Cloud Accounting. Here we are in our Get Great Guitars Company summary page within Sage. We're going to be opening up our financial statements, going to the reporting dropdown, taking a look at our balance sheet first, opening up that balance sheet. Once open, we're going to be right-clicking on the tab up top so that we can duplicate it. Then we're going to go back to the tab to the left. We're going to do the same thing for our P&L, profit and loss, income statement. We're going to be hovering over the report. Go down to the P&L, profit and loss. Once opened, we're going to do the same thing to it. Mousing over the tab up top, right-clicking on it, and duplicating that tab. Checking the dates, going back to the balance sheet. Let's just check out the dates over here, make sure they are appropriate. 12/31/20 looks good. We're going to go to the income statement, and we're going to start on 4/1 because that's the month we're working on. So that looks good. We're going to go back then to the profit and loss, and we're going to then, or not the profit, the first tab, which happens to have the profit and loss in it, but we're going to totally change that right now. We're going to then go to the banking, which is in the ribbon, the banking information, looking at that bank feed information. We only have one left that is still here in the bank feed Sage limbo area, and we're gonna get that one going here. So there's the 2047. Now this is going to be a deposit. Let's jump over to our flowchart just to consider our scenarios again. This is in QuickBooks Desktop, but we're just considering it for the flowcharts here. So we thought about a situation where we had the deposits and we just recorded it in the system as a deposit. That would be a cash basis system. We thought about a system where we had to invoice people and then we had to tie out the invoice to the deposit that's going to come in the bank feeds. Now let's think about a system where we're going to say we're in a store, let's say, and we have a store and people are paying us like in the store, and we're creating sales receipts within the store. And then we're gonna take those sales receipts and go to the bank with them and deposit them, including things like cash. Well, if that's the case, if we were to take these sales receipts and just record them into the checking account when we make the sales receipts, it's not going to go through the bank feeds in the same format, because the bank feed's going to show the grouped format, the grouped sum up of cash that we went to the bank and deposited. That'll make it difficult to reconcile. So in that case, like if you're collecting a bunch of cash during the day, making a lot of sales, and then you need to put that into the system, you'd like to group it into the system in the same format that it's going to be clearing the bank in. So you could just wait till it clears the bank and be dependent on the bank to clear it, but typically you would want to record it in the system when you make the sales receipts and tie that out to the deposit in the bank. So one way you could do that is you can make a clearing account. So when you make the sales receipt, instead of putting it into the checking account, you put it into a clearing account, another cash account, and then you take that money and transfer it from the clearing account to the bank account when you make the deposit in the same format, the same amount in the deposit that will be seen in the bank statement, and then we'll match up the amount that comes through for the bank feed to the bank statement. And this will also be something you could use if you're getting accounts receivable or invoicing people and they're paying you with multiple payments and you're grouping them when you deposit it into the bank in some fashion rather than just one payment at a time per invoice. So how might that look? Let's go back on over here, and we're going to say that let's create a new tab. I'm going to right-click on this tab up top, and we'll just make a new one. So I'm going to duplicate it. So make another tab. We're going to go back to the accounting, so that takes us to the summary page within Sage. And then let's go back into the banking information. And so if we go into the banking information, we'll see that we have these two accounts. We got the checking account, and then we just have like the cash account. And I'm gonna assume the cash account is just stuff that we have on hand that we haven't deposited into the bank. That's in the cash drawer at this point in time when we need to go to the bank with it, right? That's what I'm gonna assume this is. So I'm gonna record this information then into the cash section. So we're gonna go into the cash area and then transfer it into the checking account as we go to the checking account at the end of the day. So I'm gonna go into the cash section. I'm gonna say entries, and I'm going to create a sales receipt for it. So I'm going to go to the new entry button, fairly like medium, pretty large button size for buttons, as buttons go. It's a pretty big button. So we'll go to that, sales receipt. And then in the sales receipt, we got the customer receipts here, and then we've got the other. So I'm going to go to the other receipts, and it's going to be a customer related. And I'm imagining I'm filling this out basically kind of like at the cash register as we get the money from the customer, typically cash. I'm going to think cash we're going to be receiving here. So I'm going to say that we have the customer receipt. So I'm going to add A is going to be our customer again. So we're going to say it's cash. It's coming out. It's going to go into the not the checking account, but the cash account. And then I'm going to say the method is cash. We're going to receive, and I'm going to put this in April again. So let's put this up in April. Let's say 3rd this time. And then we're going to put the amount here. I'm just going to say $100 for the amount, and we're going to bring that down. And then the account down here is going to be to sales of materials. I'm just going to say it's item 1, and then the amount there. I'm not going to apply the sales tax to it. So we're just going to have the $100 for this sale. What's this going to do when we record it? It's going to increase the cash account by the $100. The other side is going to be going into the sales on the income statement. However, cash account being the cash and not the checking account. So let's check it out. Let's go ahead and say save. And let's go save and add another. We're going to do a few of these. So I'll save and add another. And then we're going to bounce on over to the balance sheet just to see what happens over here. If I say calculate, I should see another cash account for like the cash on hand that we got. So I'm going to say that, and then magically cash appears underneath. It's like the cash on hand that we got it on hand. We got to take it to the bank. It's not safe to have a bunch of cash on hand in the store. So we'll go to the bank at the end of the day. But before we do that, we're going to go back to the second tab, and we're going to do this again. And maybe we should make another customer. We'll sell to B this time. Customer B. And then that's going to go to the default account. We'll make the sales materials. So there we have that. And then I'm going to say this is cash received. Let's make this in April as well. So let's bring this on up to April. I think we're on the 4th. We're doing these as of. Let's say this was $250. And then we're saying 250, and it's going to be for the sales of materials. And then I'm going to say items 1, 2 or something. And then there's the 250. So this is going to increase cash. Other side's going to be going to revenue again. So let's go ahead and say save and add another. And then let's add another one to C company. You probably could have guessed that. We're going to go to C company, or C customer this time. C customer. And this is going to be, we'll just add that. Default is going to be sales materials. And then I'm going to bring this across. So once again, let's make this in April 4th. And this time, let's make this finishing it out. So it needs to be, let's just say, it needs to be 204,750. We made a $100 one minus a 250. So let's just make this one for the difference of that amount. So I'm going to bring this back over, and we're going to say that'll be for the 167 or 1697.50. And so that is that. It's going to the sales of materials, and then item, say item 28. That's an expensive item. And then we have that, and this is again going to increase the cash, and the other side is going to be going to the revenue. So let's go ahead and save that, and let's check it out. Hopefully I got the numbers to tie out here. So we're going to go over to the balance sheet, and then I'll see what happens. If I update this, I'm going to say, let's go ahead and update this. We now have in the cash account the $2,047.50, which matches the deposit we saw that's going through on the feed here. 2,040, yeah, it does. So that's good. So there we have that amount. So what that would mean then, if we look at our flow chart, now we're imagining we're here, we made the sales, we're holding on to the cash, that we haven't gone to the bank with. Then we're going to go to the bank with and transfer it to the bank in the same format that we expect it to be seen in the bank feeds. So we're not reliant on the bank feeds here. We're going to use the bank feeds as kind of a double check. So at the end of the day, then we're going to say, all right, it's the end of the day. We've got this cash. We're going to go to the bank with it. We're going to transfer it out of the current account, the cash account, and put it into the checking account. Now, there's a couple ways we can do this. I'm going to go back to our screen over here on the second screen. I'm going to go back into the banking. So we have our cash account and our checking account. Now I'm going to transfer it from the cash account into the checking account. I think the easiest way to do that is actually with a journal entry. So I'm going to go to the plus button up top, and I'm going to create a journal. I'm going to call it a transfer. So I'm going to say transfer, and I'm going to put this into, and I'm going to put the date that it cleared the bank was the 15th. Let's put it in on the 14th and say it took a day, to clear the bank into the bank feed. So I'm going to put it in there as of April 14th. And then I'm going to say this is a transfer. That's probably where I should have put the transfer rather than the reference, but that's okay. We're going to be saying that the checking account's going to be going up. It's going to be going up by the amount that's in there, which was the $2,047.50. So I'm going to say this is going to be 2,047.50. And details, I might put this as a transfer or deposit, you might say. And then the other side is going to be going into the, or it's going out of the cash account, which is a credit. And then I'm going to say that this is a transfer, and that's going to be the 2,047.50. So there's the debit and the credit. The debit increasing the checking account, the credit decreasing the cash account. So if we go ahead and save that, so I'm going to save that. There we have it. Now, if I go back to the balance sheet, what's going to happen? The cash account's going to go away. Checking account's going to go up by that $2,047.50. Let's calculate it. See that? Disappear the cash account. Checking account went up. Now let's go back to what would happen in terms of our bank feeds. So now we have this amount here, and we're going to truly use the word for match now. At this point in time, we've already deposited it now. And so we're not going to create a new one. And we're going to use this match feature different than we did last time. Last time we kind of used it to match to an invoice, but still made a transaction. This time we already have the transaction in there. We already have the deposit. What we want to say is to say, hey, look, the deposit's already in place, and therefore you're not going to record anything, right? We're basically saying, hey, look, you're over here in limbo. You don't have to be in limbo. You're already on the financial statements. You're already there. So we're just letting you know you're already there. And so it's not going to create any new transaction in this case. We're just simply matching it up to the transaction that has already been input. So then we're going to go down and say match that. And then if we go back to, so we've done with all these items. Then if we go down to the balance sheet again, nothing new is going to happen here. We matched it out and we just said, hey, again, we told the bank feed, look, we already recorded it. We already found you here. And the goal of that is to be able to match it up exactly to what is seen in the bank feed. And that's, you might say, well, why would we do that? What's the point of the bank feeds? Notice the bank feeds are also kind of the bank reconciliation process. So that's going to help us when we go to the bank reconciliation. If we already matched it out, then we've reconciled that item, and that'll make the bank reconciliation easier to do. So whether you do it as you go with the matching principle in the bank feeds, or whether you do it with the bank reconciliation, you're going to have to match your side of the books, deposits into the cash, with the bank. So you want to make sure that you deposit into the bank in the same format that it's going to go through on the bank statement or into the bank feed, so you can match those items out. So that's going to be it for now. Let's get out of here.